Bam. How are you? How are you? It's Saturday night, and I am streaming. Why this evening and not this morning? Well, just the way it worked out. I had a fascinating day. Got a chance to get out. We'll talk about it a little bit more. If this is your first time watching my show, you probably wonder who this person is. Well, my name is John Schenk, and I am a real estate agent, real estate broker out of St. Louis, Missouri. I founded Deerwood Realty, which is a small, very small brokerage. And we mostly help buyers buy homes and sellers sell theirs. Not big, but I'm in the market enough to know what's going on. And I like to talk about it with like-minded individuals. If that's something that sounds like fun to you, I pretty much stream every day but Sunday, and sometimes I even stream those days too. So come on, hit the subscribe button. I'd appreciate it. There's the bell notification button. I don't know. I like to stream at 9 a.m, but I don't always make it. So maybe the notification bell would be good. But sometimes I just hop on a stream just to chat. So that being said, today is a strange day. It's a Saturday, and I am sitting at home. Well, I mean, sort of. I'm not doing the real estate business today. I'm not showing homes. My buyers are not interested in going out, and I'm trying to understand this. And so I just wanted to go over it from my perspective and what I've got. So I have probably 10 buyers right now, and that's not too many to carry because people are going on vacations and things of that nature. But I did want to try to explain it. So most weekends, starting Friday nights, I'll start showing houses Friday, Saturday. Most of the time offers due on Sunday. Find out Monday, Tuesday or so if we got the house. And then Tuesday listings start coming on for the weekend coming up. Normally, I mean, if I show a house on a Tuesday or Wednesday night, it's usually because it didn't sell over the weekend. And that in this market would be a great opportunity to put something in, unless the price is just really, really too high. But that didn't happen this week. And I don't exactly have the concrete answer, but here's what I know to be the case because I talked to my buyers. So some of my buyers, it's the summer and they go places. And so they're not going to be in town. One of my buyers is they have a VW bus and they go camping, and this weekend they're going camping. So they're out. They don't care what house comes up on the market. They're not interested. They're going camping. I have another set of buyers that it's a younger couple, and they're going on vacation this weekend. They're not dealing with the housing market. They don't care. I have another buyer that is tired of playing the game, the best I can put it. Tired of playing the game. They have written multiple offers on homes over the past month or two. Always over asking, but they don't seem to ever get the house. Over asking, no inspections, all that stuff, and they just get tired. They're disgusted, and then so that's why they're not looking this weekend. They'll get back to it. They lost a house this past weekend, and it takes a while to get over the loss. So I don't blame them. And then finally, I have another buyer that they saw the rates increase to over 6% this past week, and they're questioning whether or not they can even afford to buy something at this time. They're not so sure that they want to be involved in it, especially if the housing market goes down. They feel like they could probably pick up the same house or better in the future if they just wait it out. So far, that hasn't been a great strategy. So far, I mean, I've got buyers that have been around for years that are still waiting on the sidelines as housing prices have gone up and gone up and gone up, and they're just sitting there on the sidelines waiting for something that may or may not happen. So that's strange. Now, one of the things that you may not know about St. Louis in the summer is that today is probably almost 100 degrees outside, kind of humid. And I've been out there today. I cut the grass today, but it's miserable. It's miserable. Today is not the day to be out there looking at houses. Will there be people looking at houses? Of course. But for many of my buyers, even weather at this temperature, not doing it, not doing it. They'd rather do fun things. They'd rather do barbecues, go to the pool, go to movies. They just aren't interested in looking at houses. And you may say, well, that means they're not a determined buyer. Well, that could be true. This week, they're just not interested. They're just not interested. I wouldn't be surprised if next week is difficult as well. With the 4th of July coming up, I don't think that's going to be a very good weekend either. Now, having been in the business for a long time, let's just go over the 4th of July holiday. The 4th of July holiday is funny for me for a couple of things. One, it's a great time to go buy a house. Great time to put an offer because a lot of buyers aren't around. So your competition is lower traditionally. However, the flip side of that is there's two things. One, it's the 4th of July holiday. And so buyers don't want to go see houses particularly. Two, sellers either know it's the 4th of July holiday and don't put their house up for the market. They don't put it on the market that weekend, or they're gone and won't let you show the house. Either way, it's not great for your inventory, basically. Now, what happened this weekend for the sellers? Sellers put a lot of houses out on the market this weekend. A lot. For example, one of my buyers, we have pretty tight parameters: price, bedrooms, garage, no garage, how many cars, basement, yes or no, tight parameters, school districts. And so I can just see on all of my buyer searches what's going on. And one buyer in particular, let's just put it this way, normally they'll see one property a week that's come to market. Now the inventory has been really, really low all summer long. So, and actually it's been low for longer than that, but they normally get 1 to 2 properties to look at on a week. And I know that sounds bad, but that's just how bad the inventory is. This weekend, there were 3 properties I sent directly to them, and there was about, 15 to 20 new listings that came up just in their specific spot. Now, I'm telling you this, okay? They should be out looking at least those 3 houses that I put there for them. But they're not interested. They're not interested. They don't care. They're going to do vacation. They're not about mortgage rates. This opportunity that they have this weekend, they will let pass. And as an agent, I don't feel like my job is to push them in any way. So I won't. If they decide that, it's too hot and they don't want to look, that's fine. That's fine. I'm not that kind of an agent. I'm not going to push them to go see houses they don't want to see because it doesn't make any sense for me. Even if they go look at a house because I tell them they should, it doesn't mean that they're going to write an offer. It doesn't mean that they're going to be interested. And so that's just where I'm at. So this gave me today to be free. I mean, a Saturday free in the summer for me is just very unusual and a great thing. So I cut the grass. I took the wife out to some parks in the in the area, and we just had a good time. Had some lunch out. We ate out today, and it was a good day. But, I don't think you're here for that necessarily. I think you want to know about some real estate news and some news in general. And so we'll go over those things. The first thing I wanted to go over, though, let me get it for you. In the Google search trends, there was this article, and I wanted to go over it because I think it parallels a lot with pretty much anything that one does, and we don't seem to talk about these stories at all anymore, and it's frustrating. It's frustrating to me because the way I was raised was the way this story goes, and that's not the way kids are raised these days, or at least that's my understanding. I would never bring this story up with my kids because they wouldn't care. But let's go over it. It says, Phillies call up former number 1 overall pick Mark Appel. Appel was taken first in 2013 before Chris Bryant and John Gray. Now, this is a story of overcoming obstacles. There's this guy was drafted number 1, okay? He was, up until then, a great pitcher. Okay. But he was drafted in 2013. It's 2022. Okay. It says the Phillies are calling up former number 1 overall pick Mark Appel, they told reporters Friday night, and Appel confirmed the news on social media. It says this concludes a journey to the majors with so many different twists and turns for Appel. He was first drafted out of high school in 2009 by the Tigers, but he elected to attend Stanford. He was one of the top pitchers in college baseball come 2012, but expectations that he wouldn't sign caused him to fall to the Pirates at the 8th overall pick. Now, just so you know, I mean, if you're being drafted in 2009 out of high school, I mean, people see your talent, okay? People know that you've got talent. And then to be picked 8th in the draft, signability issues, I mean, I get it, but that's fantastic. And then it says he remained in school and heading into 2013, the 2013 draft was considered one of an elite trio of collegiate prospects, along with Chris Bryant and John Gray. He would go first overall to the Astros, with the Cubs getting Bryant second and the Rockies taking Gray third. So here, everything so far he's done in his professional career was obviously the right move. He was drafted first overall. That's impressive. And then it says Appel struggled, posting a 9.74 ERA in his first 12 starts in high A in 2014. He still pitched in the Arizona Fall League that year and was more mediocre than bad in Double A and Triple A in 2015. Okay, so now, like, look, when you're drafted in the 2013 draft, 2015, you should probably be getting on a roster. If you're drafted number 1 overall on the major league roster, it says still he wasn't included in Baseball America's top 100 prospects by the spring of 2016. And then one of the other pitchers, Bryant, had won a Rookie of the Year and was beginning his MVP season. Facts that started to cause the general public to view Appel as a bust by the end of the year. He was traded to the Phillies in the deal that sent Ken Giles to the Astros. Now, I haven't been following baseball in quite some time. I don't know what happened exactly, except I think it got a little political, and I think I don't care about the politics, and so I stopped watching. But it was the McGuire thing too, the steroids. That really, it's like I didn't take steroids. I got hundreds of millions of dollars, and then I did take steroids, but I've retired, so it's okay. It's like it just was a bad deal. It says after a pretty bad 2017 season, Appel was designated for assignment outright off the Phillies 40-man roster. That's not good. You want to be on the 40-man. It says he ended up leaving baseball, though he's careful not to use the word retired. In 2021, Appel made a comeback. He ended up making 8 appearances in Double-A and 15 in Triple-A, pitching overall to a 6.06 ERA and a 1.61, I don't know, a whip, but I'm sorry. It's been a long time since I've been I don't pay attention to the news statistics either. Anyway, it says this season, however, Appel has a 1.61 ERA, 0.93 whip. Is that wins above replacement? I don't know. I don't want to get it bad, but anyway, and 24 strikeouts in 28 innings in AAA. He's recorded 5 saves and 5 wins in relief without having taken a single loss. He surely won't be a high leverage reliever for the Phillies here to start his big league career, but they've had late inning problems, and there's a winner here for excellent feel-good story if he sticks and finds a way to meaningful innings. And so what I wanted to go over with this story is, look, the guy kept trying. Now, he had surgery. He wasn't healthy. He had surgery, I think, on his shoulder and his labrum. I mean, I get it. But this is the story we always told. This is how I grew up. You work and you work and you work and you grind and you keep kicking and screaming and doing everything possible to win. You don't give up. You don't quit. Like, that's how I was raised. And in my real estate career, it's been pretty terrible at times. Very humbling. And it continues to be that way. I mean, when I go on a listing appointment and there's 4 other people, and I first find out that somebody else got the listing by looking in the MLS and seeing that somebody else has it, that takes a great amount of humility. But it also takes a lot of perseverance to get up. Sure, it didn't work out on that listing. Maybe it'll work out on the next one. You keep trying. You keep doing it. Now, this is a success story because he made it. He made it. He's got something to fall back on in the sense that he was always going to be. He's got that he was the number one draft pick in baseball, so he's got that going for him. They can never take that away from him. But when you make the major league roster, they can never take that away from you either. And so for him to persevere, 30 years old now, and as you get older, man, the body just doesn't seem to go like you'd think. At 45, I can tell you, it's just bizarre to grow old. So for this guy to do this, fantastic. I just like he's already a success. He's already won. He made it to the major leagues when things were not going well for him, and there were tremendous expectations. When you're the number one draft pick, you are expected to produce, and that's not the same way in real estate. The weird thing about real estate is you go get your license, you pay your fees, you take your classes, and you get out there and you do it. There's no we don't have any prospects per se. I mean, we recruit agents, but we never really know how that's going to turn out. And we have a very, very high turnover rate. And so congratulations to this guy and good for him. So now we're going to we're going to kind of take a shift, and what we're going to do is we're going to talk about the housing market crash. Is the housing market going to crash? Yes or no? And then what will home prices look like? That's in 2022. What will housing prices, will there be a housing crash in 2022? What will housing prices look like in 2022? We'll read some, what I would say were professional opinions, and then I'll tell you what I think. Because like I said, I'm in the market every day, and I managed to live through 2009, 2008, the Great Recession, when the housing market was terrible. It was terrible for the sellers, terrible for the people that lost their homes, pretty darn good for buyers. Once in a lifetime, opportunity to buy. Maybe we're going to see that again. Who knows? But let's take a look at these articles and see what they have to say, and then we'll get to it. So here we go. It says the housing market about to crash. This is from Bankrate. Bankrate, to me, always kind of selling something, but lately they've had these articles that are pretty good, and I just wanted to go over this one. Is the housing market about to crash? Here's what the experts say. Now, off the top, is the housing market going to crash or about to crash? I think that's a very it's a one-dimensional question. Okay, the housing market. Is only the housing market going to crash? What about inflation? Is inflation a contributor to the housing market crash? And then what are we defining as a crash? That's the other issue. So let's get to it. It says the U.S. housing market is on fire. That's true. Double-digit appreciation is the rule. Giddy sellers are sifting through multiple offers, and frantic buyers are forced to pay more than asking prices, sometimes by $100,000 or more. Now, if you haven't been in the market, you probably don't believe that. You probably don't believe someone would pay $100,000 more for a home than the asking price. I did a special a couple weeks ago, just showing houses in 5 zip codes in St. Louis County and St. Louis City, and in 2 of those zip codes, there were people that have actually bought a house for more than $100,000. What price points are that in? Well, this particular one was $300,000 asking price, $300,000, house sold for $410,000, and that was in the city. And I'm not going to get any more specific than that because I don't want to embarrass the buyer or the seller. Was the agent wrong on that one? Did the agent just miss on the number? I don't know. I didn't see that house. I didn't go to see that house. None of my buyers were interested at that price point in that location, so I didn't see it. But I mean, I have been in 2 or 3 houses where I've had offers where we've been $50,000 over, and the houses one went for $66,000 over, and the other went for over $70,000 over. So we lost out. to those offers. It says, the real estate party remains in full swing, far longer than anyone expected. The National Association of Realtors says prices of existing homes soared 14.8% from May of 2021 to May of 2022 and topped 400,000 for the first time ever. Prices are a whopping 45% since the coronavirus pandemic began in March of 2020, according to NAR data. Now, let's try to put this in a little bit of perspective. One, there's a neighborhood that I follow very, very closely. Okay. Just this past, I've sold houses in the neighborhood, usually between around $225,000 to $230,000. The last house I sold in that neighborhood was last year, a little bit more than a year ago. Currently, houses in the neighborhood for this particular product, right around $250,000, not unusual. So, I mean, 45% higher, not in that case. It's not 45%, but overall in general, maybe. But the issue is the prices of existing homes have soared. My opinion is because it's been due to lack of inventory available to purchase on the market. It hasn't been like the reason why the prices are going up is because of the inventory and inflation. So let's continue. It says, is the housing market going to crash? Well, the last time the U.S. housing market looked this frothy was back in 2005 to 2007. Then home values crashed with disastrous consequences. When the real estate bubble burst, the global economy plunged into the deepest downturn since the Great Depression. I don't know if you remember that time period. I remember it differently than some do. I remember opportunistic buyers really just hoping for an opportunity to buy. And, back then, there were people that did a pretty good job. I mean, bought some really nice houses where sellers, many of them, at least in St. Louis, they just felt like their house was never going to be worth what they were paying on it and left. They may have had a job. They may have bought a different house. That would have been a better value and let the other one go into an eviction. It was very, very odd. It was a very, very odd time. So there's a quote here. It says, we don't have a bubble. We just have an unhealthy home price growth. Now, this is from Logan Mohtashami, lead analyst at Housing Wire. I read an article by him yesterday in which he called it a housing market nightmare. But anyway, it says, now that the housing boom is threatened by soaring mortgage rates and a potential recession, buyers and homeowners are asking a familiar question. Is the housing market so hot that it's about to crash? So I think I hate to say it, but I think people worry about a housing market crash as buyers constantly, no matter what type of market we're in. I mean, a first-time home buyer, 3 years ago, I helped a couple buy a home in University City. And the whole time they were worried about, and they had good money, they were going to be fine, and they had good jobs, and they were always worried that the housing market was going to collapse. It was going to crash. Well, their house was probably worth $600,000 then. They're probably sitting in like $850 right now in that neighborhood. And I'm not joking. That's a very popular neighborhood. We happen to get a good price, and they've improved the house since they've lived there. So I told them then, and I tell anybody, I don't think your house is going to zero. I mean, will it be underwater? I mean, if you buy a house right now, will the house prices go up? Maybe, or go down? It may, but you've got a home and you're going to stay there for 5 years, maybe? You're fine. You're fine. Go worry about other things. Worry about your neighbors that move in next to you if they buy a house on the cheap. Worry about those kinds of things. So it says the one thing that I keep getting asked over and over is this a bubble, says Phil Shoemaker, president of originations at mortgage lender Home Point Financial. If you look at what's going on with home price appreciation, it feels bubblish. But if you look at the fundamentals behind it, it's hard to say that it is. Well, if you ever look at a chart and it's at a 45-degree angle, it always looks fantastic until it breaks its trend line and starts going the other direction. And that's what I really feel like in 2007, 2008. I mean, everyone was saying you should buy a house. Everyone was saying it was the greatest purchase ever. George Bush was saying that, that he'd done a fantastic job with home ownership. He was taking credit for it. So just kind of interesting. It says, instead, the foundations of this housing market look far more stable than those of 15 years ago. The supply of homes for sale remains near all-time lows, and borrowers are more creditworthy than ever. So we'll go through some of these things where I don't think that's true. But right now they're saying that there's not a bubble and home prices aren't going to crash, and it's not a housing market crash. So it says key housing market statistics. It says a total of 30,881 U.S. homes had foreclosure filings, default notices, scheduled actions, or bank possessions as of May of 2022. Okay, so it's not a lot. And the reason why it's not a lot is because as home prices have been going up, the equity of the home is also going up. So you're not seeing a big pattern of foreclosure filings or things like that. It says Illinois has, and that's another thing. So buyers will say to me, I just want to look at foreclosures. And it's like, there's no foreclosures right now in St. Louis. I mean, the ones that are, few and far between, and people are bidding those up to prices that may be more than what you could buy from a traditional seller. So it doesn't make a whole lot of sense. Still, that's what people have learned all their lives, is foreclosures are always a deal. And so it's hard to educate them on the market. But it says Illinois had the highest foreclosure rate of any state in May at one foreclosure filing for every 2,000 housing units, according to Adam. It's followed by New Jersey, where one in every 2,346 homes are in some stage of foreclosure. Lenders repossessed 2,857 properties through completed foreclosures, known as real estate owned, in May of 2022. Illinois had the most REOs at 350, followed by Michigan's 249, according to Adam. Now, look, Illinois, the entire state, had 350, in May. There's like 3, 4, 5, 6, 8, 10 million people there. There's a lot of people there. And in Michigan, too, a lot of people. So these are not big numbers. It says home sales fell 8.6% from May of 21 to May of 2022. The National Association of Realtors said the median house price reached $407,000 in May of 2022. Look, home sales fell because there was no inventory. That's what I believe, because when I take buyers to see houses and there's only like 2 houses to see, that's a lack of inventory when there used to be 12. Home rate of appreciation per NAR was 14.8% from May of 2021 to May of 2022. It's been pretty crazy. It says existing home prices. For months, housing economists have been predicting that the housing market would eventually cool as home values become a victim of their own success. Home prices have risen far more quickly than incomes, creating an affordability squeeze, and mortgage rates have doubled since August of 2021. This is true. And let me just say this, okay? Some people, they saw mortgage rates at 3% and they knew it was a deal, and they went out there and they would go over asking on a house just because they knew that this was maybe one of the only times in their lifetime they were going to see a mortgage of below 3%, or 3%. The problem with that is when everybody's doing it, it just raised house prices to ridiculous levels. To now, when sellers go on the market, they have to understand that the mortgage rates are not at 3% anymore. They're at 6.1, 6.2%. So it's a problem. It's that here's existing home prices. The median price of homes sold by realtors has soared since March of 2020. Yes, but if you look at this chart, okay, say you could buy a house for $275,000 in March of 2020. That same house now is over $400,000 in theory. It's not like that in the real market. It's not like that. If you're in the let's just say $250,000 range, you may be looking at a $325 on, at least in St. Louis. That's still not great, and it's still causing the problems because a lot of my buyers are sellers, with plenty of equity, who can't sell their house or justify selling their house because if they go to buy a house now, they're going to get less than what they have in their current home as far as amenities. They'll be able to pay more, but let's say a buyer is moving from a 2-bedroom, 2-bath home and they want to move to a 3-bedroom, 2-bath home, okay, because they've got more kids and a larger square footage, okay? Well, what they paid for their 2-bedroom home, let's just say that was $200,000, okay? And now they want to move into a 3-bedroom home, and that's running $300,000. They didn't really, I mean, they're not really getting anything. Whereas before they may have paid $250 or $225. It wasn't such a huge spread to get more than there is now. I mean, it's literally hundreds of thousands of dollars in some cases. So despite those potential drags on prices, home values keep soaring. The hottest metro area in the U.S. is Punta Gorda, Florida. Home prices there soared 34% from the first quarter of 2021 to the first quarter of 2022, according to the National Association of Realtors. Other fast appreciating markets include Ocala, Florida, up 33.8%, and Ogden, Utah, up 30.8%. So, I mean, you're seeing people move from the Rust Belt to Florida. You're seeing people move from California to Texas. It's undeniable. Okay. So if people are already moving, like if you're moving to Florida, okay, that's already demand on the housing market. So those prices are going to go up just for that. And then add to that inflation. Add to it just the price appreciation of homes. It is amazing. Experts say price appreciation is worrisome. Okay, so it says the nightmarish memories of the last boom and bust remain fresh in the minds of homeowners, economists, lenders, and realtors. With home prices rising sharply in the past year, the latest boom is creating no shortage of concern. So yes, I'm very, very concerned. Why? On my thing is this, like I help buyers and sellers, okay? If you buy a home right now, okay, and your house price goes down in value or your house goes down in value, you're going to be mad at me. So the next time you go to sell your house, the next time you go to buy a house, you're going to be pissed off at me. You're not going to want to use me. I don't wish for that. The second thing, let's say you lose your job and you lose your house, okay? You're probably going to be sad, and I mean that, and that's at a minimum. You're going to be depressed and down, and now, you're not going to want to use me. You're kind of going to go slide away and hide away, and that feeling of sad, that feeling of disappointment, dread, not wanting to reach out or anything is hurtful to me. Like, I don't want people to be hurt. The worst, the idea that I would hurt someone or people would be hurt by something that I did or I helped would keep me up at night. It's not a good feeling. It says prices are clearly accelerating at a pace that could become worrisome. Doug Duncan, chief economist at mortgage giant Fannie Mae, acknowledged concerns about the stability of the housing market. In the past, big run-ups in home prices have been a recipe for trouble. So in the past, when this happens, it's not a good thing. But nothing's ever happened quite like this. It says, our view is that the house prices are somewhere in the 15% range above what long-term fundamentals suggest. So it's a reason to ask, is there a problem? It says, meanwhile, Greg McBride, the CFA of Bankrate chief financial analyst, says a price plateau is more likely than a sharp fall. So that's not a housing market crash. That's not a housing market collapse. If prices go down 15%, they're not calling that a crash. And that's what I have problems with. I mean, if you look at Google, people are searching for things like housing market crash. Okay. Well, how do you define a crash? That's the issue. I mean, if it goes down 5% for you, is that a crash? Is it by 50%? That's the issue. It's like we're talking about things, and it just depends on your definition of a crash or collapse. With the recent pace of home price appreciation, while the recent price of home price appreciation isn't sustainable over the long run, that's right. That doesn't mean prices are at risk of a sharp drop. Real estate prices can move in big spurts like now and then show relatively little change over a period of years. A plateauing of prices is the more likely outcome. Well, what does that mean for you? Now you've got a very expensive house that you can't purchase. So you have affordability issues. However, because mortgage rates have essentially doubled since August of 2021, some housing economists expect a modest decline in prices. Matthew Poynton, senior property economist at Capital Economics, wrote in a June 6th note that he now projects home prices to fall about 5% by mid-2023. So will there be a housing market crash in 2022? No, based on this fellow's projections. He's an economist, okay? Is he right? Is he wrong? Who knows? But he's saying that prices are going to fall 5%. If prices fall 5%, that's not exactly a crash. It says the culprit mortgage rates rising above 6%. Still, Poynton sees a slowdown rather than a collapse for the housing market. The prevalence of fixed rate mortgages, tight credit conditions, and a relatively healthy labor market still rule out a price crash. Now, as I've been saying, I'm gonna stop right now, and I'm gonna say, as I've been saying, the problem with this question is that it is a one-sided question. Okay, it's based on this idea. It's based on this idea that the housing market is in its own space, and that's not the case. The housing market is dependent on other factors. Okay, so let's go over the other factors, just in my opinion. The prevalence of fixed rate mortgages, yes. Tight credit conditions. Okay, well, let's talk about the tight credit conditions. As we increase the interest rates, as the Fed increases rates, credit becomes more expensive. Okay, credit, for example, a credit card, percentage rate wise, if you're keeping a balance on a card, and let's say it's 10% now, well, if it goes up to 15%, 18%, 20%, these are terrible numbers, okay, for you as a consumer, okay? So that's a problem. So when you look to get a mortgage and all of a sudden you're carrying a high level of debt with no way to pay it down, on like we would call unsecured credit with the credit cards, that's going to be a problem. And then it says, in a relatively healthy labor market still rules out a price crash. Okay. Well, with inflation, okay, inflation in everything, inflation in food, transport, all of this inflation, a company has two problems when it comes to inflation. One, their workers aren't comfortable or aren't happy at their old wages when inflation is raging to 8 to 10%. They're going to want to raise, okay? And two, their input supplies, their inputs are going to be more expensive. If they buy a widget and they need that for their goods, that widget is more expensive. If they have to transport that widget that they finally built to some store or something, that becomes more expensive. So it just keeps going up. And that in turn has a problem with the business. The business says, I can't afford to pay my current workers more and can't pay more for input costs. So either I'm going to raise prices, which is what we're seeing, or I've got to start letting people go. And if people stop buying because they've all of a sudden lost their jobs, that's a significant problem. That will affect the housing market negatively. So it says the National Association of Realtors chief economist Lawrence Yun agrees that no crash is imminent. And notice how he couches that. Well, we're not going to have a crash right now. It's not obvious right now. Next month, we're not going to have a crash. But as inflation keeps eating away at the economy, it's a very big problem. There's just too much of an imbalance between supply and demand for home values to crater. Right now, there's no supply for houses. Okay. If supply comes to the market and people still can't afford those prices, something's going to happen. He said, I would not be surprised if some markets do see some minor price declines. Well, no one would be surprised if there's some minor declines, but that's not a housing market crash. It says, however, Yoon said any declines are likely to be small and healthy for a market that has seen intense pressure on affordability. Yoon pointed to Phoenix as a place where price appreciation has defied gravity and where minor correction wouldn't cause widespread economic pain. Well, the problem with Phoenix is you had people like Zillow or corporations, big corporations with lots of corporate money like Zillow going in there and buying houses like a drunken sailor to fix and flip. How did that work out for Zillow? Anyway, could it fall 5%? Certainly, yes. Even if prices were declined, say 5% in Phoenix, is that a concern? Absolutely not. Yeah, that's true for me too, because like, just look at it on the spectrum of homes. Okay. There's like right now, like, let's just take I want to say a distribution, but it's probably not the right way to look at it. Let's just say that there's 90 homes on the market. Okay. Right now it's it's like in a normal situation, you have 30 homes that sell below, sell for below asking, 30 homes that sell at asking, and then 30 homes that sell above asking. It's like 45% or it's like 45 homes now, or even more, maybe 60 are selling over asking. And then there's 30 that are selling at asking or below. So if you could change that out to maybe a more balanced situation, that wouldn't be a problem. I agree with that. No one would complain about that. And in fact, you almost have to have that situation occur, because when you look at a house like we've been seeing people pay way over asking for homes, that can't continue. At some point in time, you're going to have comps that mean that people that could not have purchased a house without an appraisal waiver now can purchase a house because they can get a mortgage on it. So that would be good. I would take that. It says 5 reasons the housing market is not about to crash. So are we headed for a housing crash? Housing economists agree that no painful crash looms on the horizon. Well, that's easy to say. Like, what kind of time frame are we looking at? I can confidently say that we're not having a housing crash in June and probably July. I can say that. I have no problem with that. It says we don't have a bubble. We just have an unhealthy home price growth. I don't agree with that. It says Duncan agrees that the sharp rise in home values, while unusual, isn't the sign of a bubble. It's hard to find an argument that says it will fall apart. I just gave you how it will fall apart. Now, look, I'm not a world-class economist. I've taken a few classes on economics in college. I'm living in, an economy right now, and I've seen 2007, 2008. So, I mean, that doesn't make me an expert, but I know that experts can be wrong at times. Yoon notes that home price to income ratios have returned to eye-watering levels not seen since 2006. Of course, the situation is much different, but we should be mindful of this condition. That's absolutely right. And maybe we should pay a lot of attention to the fact that the price to income ratios are ridiculous. It says housing economists point to 5 compelling reasons that no crash is imminent. Well, let's go over those reasons. It says inventories are near record lows. Okay. That's true. That's absolutely true. The National Association of Realtors say there's just a 2.4 month supply of homes for sale in September and February. That figure fell to a tiny 2.0 month supply. The lack of inventory explains why buyers have little choice but to bid up prices, and it also indicates that the supply and demand equation simply won't allow a price crash in the near future. Let me just tell you about my market. If I take a zip code and I see a house that's been on the market longer than 7 days, I have to question what's going on. If a house doesn't sell the first weekend right now, something is crazy. You missed on the price dramatically. Okay, because what happens is a lot of good agents will go to a house and they'll say, given this market, I could see this house being sold for X. Okay, not even paying attention to the asking price, write an offer, and then be the only ones that wrote an offer. And so then the seller kind of almost feels obligated to take that offer. And even though it sold that weekend, it still didn't sell for, more than asking. Now, if you see like 100 people going to a house, an open house, just know that it's likely to go way over asking, and those people are going to be blown out of the water. Builders can't build quickly enough to meet demand. Home builders pulled way back after the last crash, and they never fully ramped up to pre-2007 levels. Now there's no way for them to buy land and win regulatory approvals quickly enough to quench demand. While they are building as much as they can, a repeat of the overbuilding of 15 years ago looks unlikely. The fundamental reason for the run-up in price is heightened demand and lack of supply. As builders bring more available homes to market, more homeowners decide to sell, and prospective buyers get priced out of the market. Supply and demand can come back into balance. It won't happen overnight. I agree with this, but if you've looked at builder sentiment over the past 3 months, it's down significantly. Why is builder sentiment down if they should just be building houses over and over and over again? Well, things that affect the housing market, affect the building of the homes. Lumber prices had been ridiculous. Now other types of building materials have gone off the rails. Okay. Mortgage rates being high, that's difficult. It's difficult in a weird way because when interest rates are high, builders have, they're holding those lots. They're paying for those houses to be built, and they don't get paid until that house is finished and sold. So their carrying costs are getting ridiculous. Demographic trends are creating new buyers. There's a strong demand for homes on many fronts. Many Americans who already owned homes decided during the pandemic that they needed bigger places, especially with the rise from working from home. Millennials are a huge group and in their prime buying years, and Hispanics are a young, growing demographic keen on homeownership. I would say the split for my buyers and sellers, like I said, I have about 10 buyers right now. I would say 5 of those groups of buyers are people looking to move into their second home. And the other 5 are what we would call millennials, although I don't like to add groups to any group of people, just younger people looking for their first home, most likely a starter home. Lending standards remain strict. In 2007, liar loans in which borrowers didn't need to document their income were common. Lenders offered mortgages to just about anyone, regardless of credit history or down payment size. Today, lenders impose tough standards on borrowers, and those who are getting a mortgage overwhelmingly have stellar credit. The typical credit score for mortgage borrowers in the third and fourth quarters of 2021 stood at a record 786. If the lending standards loosen and we go back to the wild, the West days of 2004 to 2006, that's a whole different animal. If we start to see prices being bid up by artificial buying power of loose lending standards, then we worry about a crash. I don't agree with this. Let me tell you my premise, and then you let me know if I'm wrong. I used to be a property manager, used to do third-party property management on single-family homes. I found in my time there, 95 to 99% of my tenants paid the rent on time every month, okay? 95 to 99%. And so I learned then one thing. If you have the money, you will pay. And if you don't have the money, you will not pay because you cannot. And what I think people are leaving out again is housing is not just one particular thing. There are many things that go into the housing market, and you may have great credit, but if you lose your job, you can no longer afford your payments, which are very, very high right now due to 6% interest rates or 6% mortgage rates. You've got issues. And so while you could have great credit, all it takes is for you to lose your job, not be able to get another one due to economic factors, and you're toast. You're selling that house. So I don't believe the correlation between lending standards being higher. I don't think that matters if you lose your job. I mean, I really don't. If you have the money, you will spend it. And if you don't, you won't, because you can't. It says foreclosure activity is muted. In the years after the housing crash, millions of foreclosures flooded the housing market, depressing prices. That's not the case now. Most owners have comfortable equity cushion in their homes. Lenders haven't been filing default notices during the pandemic, pushing foreclosures to record lows in 2020. Well, that's also erasing equity. You know, we're increasing equity. Now, let me just ask the question. Let's say you get in a home now at $250,000, okay? And all of a sudden that home is now worth $225,000. $210,000. Now you're in a negative equity situation on your home. Are you going to stay there? Are you going to stay there? It's a question that I'm asking. I don't know. It didn't seem that people stayed there in 2007. Seems like they bailed on the houses and bought something better and then waited. I mean, then what would happen is they'd say, look, if you get if you get a foreclosure, you don't have good credit for 7 to 10 years. And people said, I can buy a house down the street for half of what I'm paying on this house. I'm buying that house. And that's what I worry about. That's what I worry about. You say, well, that didn't happen, John. I watched it happen. So all of that adds up to a consensus. Yes, home prices are pushing the bounds of affordability, but no, this boom shouldn't end in bust. And I disagree with the idea that home prices going down 5% isn't an issue. I think that once the housing market turns, it could go in a trend that's negative for a long time. I don't want it to. Believe me, I don't want it to. But this idea that we're looking at just home prices and not looking at inflation, okay? Inflation is going to screw up the economy significantly. You can't just look at housing and not pay attention to inflation. It says, I'm not worried about a housing bubble, chief economist at technology firm House.com. The fundamentals are all there. Low supply combining with growing demand for home ownership to suggest the overheating we're seeing in the housing market is not based on animal spirits, but on an unfortunate coincidental series of market forces over the past year. That's what they're saying. This article says, let's in summation, house prices may go down 5%. Okay. There will be no housing crash. There will be no housing crash in 2022. No housing market crash. Okay. That's what this article says. I've given you my reasons for why I think that might not be the case. I feel like the analysis might be lacking on a few levels. Okay. So let's go to a different article. All right. This article is a little more interesting in my opinion. It says the U.S. housing market price correction to hit coast to coast, economists warn. Now this came out yesterday. Okay. U.S. housing market price correction to hit coast to coast. And I just wanted to put something down here for a minute. So housing market price correction, does that mean to you a housing market crash? It's not what it means to me. A correction would not be a crash. So that's the problem. Is what is the definition of a housing market crash? It says the scorching pandemic era U.S. housing market is on the verge of a coast-to-coast price correction as the Federal Reserve hikes interest rates, a prominent economist warned this week. Mark Zandi, chief economist at Moody's Analytics, said his firm expects home prices to sink in key competitive markets that are most juiced or overvalued. The projected price drops coincide with a massive surge in mortgage loan rates that have sapped the buying power of prospective homeowners. That's correct. Like, you can't go buy a house right now. Let me just give you an example in St. Louis. I have a couple that could buy a $475,000 home with 3%. They're struggling if they could buy a $400,000 home right now, and they'd be much better off if they were in the $375,000 level. I mean, on their monthly payments. So we've had to look at houses that were fantastic before. We're pulling back because of two things. The prices keep going up, and what they can afford keeps going down through no fault of their own. They're both fully employed, and it's just the way the interest rates affect housing. It says the downturn will likely impact the cities of Phoenix and Tucson and Arizona, as well as North and South Carolina and parts of Florida, according to the firm's analysis. One key city set to be affected is Boise, Idaho, which Moody's has identified as the most overvalued market in the country. So if you're sitting in Boise, Idaho right now, you're like, the housing market's going to crash and I'm going to get hit. But again, my issue with this is simple. If you bought a house 3 years ago, okay, you've probably got 30% of equity in that home just from doing nothing. So if the market goes down 15%, are you crying? You're still above water. I'm just saying. Zandi warned of the looming correction in the real estate market while speaking at a bipartisan housing policy summit in Washington, D.C. Cheap mortgage rates, a lack of housing inventory, and the surging interest during COVID-19 lockdowns drove a steep spike in home prices over the last few years, a trend that is expected to slow as the Fed tightens policy and mortgages approach 6%. They're over 6% in some places. While the Fed's benchmark interest rate does not have a direct impact on mortgages, we've gone over that on previous videos, all forms of credit and borrowing are becoming more expensive on the expectation of tightened fiscal conditions. The central bank is sharply increasing rates in an effort to combat inflation that has reached its highest level in decades. That's what it says here. The rising interest rates have already caused the housing market to slow down, LendingTree senior economist Jacob Channel told the Post. Now, housing is local. In St. Louis, housing market, our housing market, our house prices have not gone down. It's still a ridiculous time when you go out in the market. Every time I have to go write an offer, it's over asking, no inspections, appraisal waived, just to get into a home. And even then, we don't always win. Fewer people are getting mortgages. Homes are sitting on the market for longer, and some sellers are cutting prices. Maybe some places, not here. Not here. With that said, we're coming off a period of time through 2020 and 2021 when the housing market was extremely hot. So this current correction, They're calling this right now a correction. Again, it's not even happening in my market. It's neither unexpected nor necessarily a bad thing, especially as it will give some buyers a bit more breathing room when they're housing hunting. I don't believe that. There's no breathing right now. It says the 30-year fixed loan mortgage rate hit 5.81% this week, up from just 3.02% the same week 1 year ago, according to Freddie Mac data. Now, understand that the average, okay, they go by weekly average, which is a little bit different than what we go on, where we can go on a daily, really daily rates. It says, so far, the rising rates have yet to show a major impact on prices. That's what I'm seeing. It says the national associations said the median existing home sales price was $407,600 in May, up 14.8% from 1 year ago. We also saw that in the other article. However, existing homes sales declined by 3.4% for the month, a sign of abating demand. No, you've got that wrong. It is not. It is not. Existing home sales going down is not because of price. It's because of inventory. There is no inventory, so you can't get a home. That's why the prices are going up, but the sales are going down. That wouldn't normally happen. Larry Botel, a senior real estate advisor at Solomon Partners, said a housing correction is inevitable and has already started to happen. So he's saying it's already happened. We're already in a housing market crash in 2022 right now. Maybe you are in other parts of the country. I'm not here in St. Louis as of 6/25/2022. Your average home buyer cannot afford to pay the same amount as they could, so prices need to adjust. The same math will also continue to benefit the rental market, as it will continue to be an option for a price-conscious home buyer. This particular quote to me is out of bounds. If you've seen rental prices, if you've seen what people, like I have a lot of home buyers currently living in leased property, and those property owners have said to my buyers, essentially, look, there's going to be a huge increase. Here's what it is. And the increases that they're putting on the current tenants, my buyers, are ridiculous. It's because of inflation, which, again, we're not talking about the core problem here, which is inflation. A drop in housing prices would align with the Fed's plan to bring down prices. Shortly after the Fed hiked its benchmark interest rates by 0.75 percentage point for the first time since 1994, Fed Chair Jerome Powell acknowledged the rapid changes in the housing market. Now, let's just talk about this from a higher level. Do you realize the Federal Reserve is actually saying to people who are doing well with their housing, look, we're going to tamp your house price down. If you're looking to sell next year, it sucks for you, but we're going to make it so your home price is going to go down. It's kind of weird, isn't it? I don't know. It seems like people are against you. I'd say if you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset. We need to get back to the place where supply and demand are back together and where inflation is down low again and mortgage rates are low again. Well, that's the issue. Housing prices are on their own in one way, but they're highly tied to the rest of the economy. And inflation is the bottom line problem. If you can solve inflation, you're in great shape. I don't think you're solving inflation like you think you are. Inflation without a recession? Inflation without solving inflation without stagflation? I don't know. It says, while a price decline in key markets is likely, Zandy downplayed the possibility of a sweeping crash in housing on par with what transpired during the subprime mortgage crisis of 2008, when risky lending practices led to a collapse in the market. The price drops are expected to be relatively low. Again, the premise here is that it was bad lending that caused the collapse in the market. But there were other things. Maybe the Fed had created a bubble in the housing market prior to that. I've noticed that they don't seem to want to take responsibility for that it was just these greedy lenders. Zandy noted that available inventory is still historically tight, with housing vacancies at all-time lows this time around rather than the all-time highs posted during the last crash. So let's read that again, because this is the first time we've seen that. Zandy noted that available inventory still tight, while housing vacancies at all-time lows this time around rather than all-time highs. So what they're saying is that the inventory was tight, but housing vacancies were very, very high. I don't know how they get that data. Mortgage lending is also far more stable than it was a decade ago. I just don't see the type of mortgage defaults and distress sales that would be necessary for big declines in housing values. That's when you get crashes and when you have lots of foreclosures and lots of distress sales. That's just not going to happen. So his premise is that the housing market isn't going to crash. Housing prices are going to go down and there's not going to be any issues. His statement is that they're not going to go down, okay, because mortgage lending isn't as sketchy as it used to be. That's like, think about it. That says nothing about inflation. And you tell me, do you remember inflation on everything being like it was in 2008, 2009? I remember I was working in construction at the time. I remember copper prices were just going through the roof. Cement prices were going through the roof. It was all blamed on China at the time. This time, lumber prices through the roof. I don't remember gas prices, but if you think that gas prices, I don't remember them ever being this bad, the inflation. So, I mean, there's that. I remember gas prices were high. I remember that. But I also remember people, and I'm not interested in being too political. I can remember people saying, well, Bush just loves the Saudis, so it's okay. You know, and it's like, well, it's not a good reason to, you know, have high gas prices, but whatever. So we've read 2 articles so far. Okay. We've read 2 articles and both have said that the housing market is not going to crash. They did not define what a crash would be, but the main reason for not having a crash is that we have a lot of demand for housing and that lending standards are tighter. Now, that says nothing about inflation and it says nothing about unemployment. So those things are pretty important, like seriously important. But no one brings that up. And so I would just caution, you know, and we don't have a definition of a crash. So those are not good things. Not good things. So I wanted to just, I've kind of given you what I think along the way. What do I tell buyers right now if they want to buy a house? Look, there's life events that happen. Maybe you're getting married. Maybe you're having children. Okay. Maybe you're getting a divorce. Okay. There's reasons to buy a home. Okay. Those life reasons. All right. Buy a home. Buy a home. Try to find one that you can afford. Okay. And then make sure that you're planning on living there 5 years, 7 years. We can't time the market. We don't know what's going to happen. But if you can make your payments, if everything can go good, you know, let's see what happens in the future. It's okay to buy. Now, if you say, John, should I buy this year or should I buy next year? Well, I can't answer that question. I thought house prices were ridiculous 2 years ago, but that's me as a buyer's agent. I'm always going to be biased on the buyer's agent side to say that houses are always expensive. And on the listing side, I'm always happy to say, hey, guess what, sellers? You thought you could sell your house for, you know, this price? No, you could get $20,000 more. Let's get it on the market. That's how I think on the seller side when I'm listing houses. So, you know, right now, if the selling of your house, like you want to get the house on them. We don't know what's going to happen in the future. We know the housing market is hot now, at least in St. Louis. Sell that thing. Get it on the market this week. If you're even considering it now, if you haven't purchased a home, okay, don't sell your house. Make sure you have another home purchased before you buy a house. And don't even try to make your house contingent on the sale or the purchase of a new home. That's stupid. Don't make your purchase on a contingent on the sale of your home. Nobody's going to deal with that. Not in this market. It's just going to go away. So That's where I'm at on those two articles. So what we're seeing, just the experts, housing market not crashing. No one knows what a crash would be, and it's not going to happen in 2022. No housing market crash in 2022. I don't know if I believe that. I've given you my reasons. I don't think the housing market's going to crash tomorrow, by the way. As the house prices have been ramping up, to me, it's like a slow motion train wreck. Okay. Day after day after day after day, we see these prices increase. Okay. When the thing unwinds, it's probably going to take a while. In economics, we say prices are kind of sticky. Look at gas prices. Notice they'll go up, and it seems like they'll go quickly, but it's a little slower for them to go back down. Same thing with housing. They've gone up, and then it's gonna take a while when they do go down. And then the question is, where's the floor? I have one other article I wanted to go over with you tonight. Let me get to it. This came out of The Guardian. I thought it was kind of interesting. This is the average price for U.S. homes hit record high in May despite rise in interest rates. Okay, so this deals directly with home prices. Okay, home prices. It says, but sales have fallen to the slowest pace since June of 2020, near start of the pandemic, and demand for homes still outstrips supply. But like, again, when we've gone over this, home prices they've gone up, and they've gone up because demand is still high and there's no inventory. Okay. The sales have fallen because there's nothing to buy for all those buyers out there. It says the average U.S. house price hit an all-time high of over $400,000 in May. We saw in those other two articles around $407,000. Even as interest rate rises and house price and high prices led to a fourth consecutive month of declining sales. I'm telling you, don't pay attention to declining sales right now. It's a myth. I mean, they may be going down numbers-wise, but they're going down because there's no inventory. Inventory is super tight. Existing home sales fell 3.4% last month from April to a seasonally adjusted annual rate of 5.41 million, the National Association of Realtors said on Tuesday. Sales fell 8.6% from May last year, hitting a two-year low. After climbing to a 6.49 million annual rate in January, sales have fallen to the slowest pace since June of 2020, near the start of the pandemic, when they were running at an annualized rate of 4.77 million homes. Look, that's a lot of homes. That's a lot of homes. You're moving a lot of homes. I think people don't realize the size of the home buying and selling market. It's ginormous. May's sales were also mostly closings on contract signs 1 to 2 months ago, before mortgage rates starting accelerating amid a surge of inflation expectations and aggressive interest rate hikes from the Federal Reserve. That's fair. Like, we always look at data. Like a month later. So it's the end of June. We're looking at May data. Those houses, most of the time closings, at least in St. Louis, I don't know where you are, but in St. Louis, 30 days to close is a totally normal, reasonable thing. So when you're looking back at the prices, I mean, those are 30 days ago at a minimum, 45 days ago at a minimum. So that could be true, that the interest rates did not take effect yet to the sales. Now, what I would say is this is anecdotal. What I'm seeing with home prices is houses on the market, say a house goes under contract. It used to be that house would sell. Now that house is coming back onto the market. Why do you think that would be happening? Well, my belief is that you get pre-approved for a mortgage if you're a good home buyer. Okay, you get pre-approved. And what they do is they run all your credit, they run everything, and they give you what you can purchase, a limit, okay? But that's based on a rate. And that rate was based on 3%. So, and that letter for me, I think I can get a letter for like 6 months, a pre-approval letter for my buyers. So, what happened was these buyers got these letters at 3%, went out and finally got that home. They'd been looking to buy, making offers, nothing get accepted. Finally get an offer accepted, go to finance it, and it's at 6% instead of 3%, and they can't afford it. That's what I think is happening. You could say I'm wrong. That's just what I see. It says, but demand for homes still outstrips supply. Even as the house sales slowed, home prices kept climbing in May. The national median home price jumped 14.8% in May from a year earlier to $407,600. That's an all-time high, according to data going back to 1999, the National Association of Realtors said. And the house prices are ridiculous. It's just ridiculous. The housing market, a crucial part of the economy, is slowing as home buyers facing sharply higher home financing costs than a year ago followed a rapid rise in mortgage rates. That's true. Average long-term U.S. mortgage rates had their biggest one-week jump in 35 years, with the Fed last week raising its key rate by 0.75 of a point in an attempt to combat the worst inflation in 40 years. My reading is a little bit different, and let me take you along that path. Rates were at 3% and jumped to 5%, and it wasn't the Fed. It wasn't the 0.7. It wasn't the 75 basis points. It had gone up before the Fed even did anything. In fact, after the Fed did their raising of the 0.75 of a point, the market actually kind of settled, went up stupid 6.8%, 6.08%, and then this last 2 days is dumped back down below 6. So, the 3 to 5% raise was the biggest problem. The average rate on a 30-year home loan climbed to 5.78% last week, the highest it's been since November of 2008 during the housing crisis, according to mortgage buyer Freddie Mac. It says, today's mortgage rates are knocking on the door of 6%. Given those conditions, I do anticipate further declines in home sales. Yes. Some real estate trends favored buyers last month. Nothing favored the buyers, and it hasn't favored the buyers since before 2000. As is typical this time of year, the number of homes on the market increased in May from the previous month. Some 1.16 properties were available for sale by the end of May, up 12% from April, but down 4.1% of April last year. Exactly right. So we may be seeing more inventory, but not historically enough inventory, given what we are seeing with demand. Even so, at the current sales pace, the level for sale properties amounts to 2.6 months supply. The National Association of Realtors said that's up from 2.2 months in April and 2.5 months a year ago. That's still short of the 4-month supply that reflects a more balanced market between buyers and sellers. Absolutely right. Absolutely right. I don't do the 4-month supply. For the last 10 years, if you've had a house that looks decent and you price it right coming to market, your house is going to sell in the first week. That's just the way it is. Unit expects the inventory of homes for sale will be running above a year ago levels by autumn. So we're looking at like September, October. This year's pullback in homes has led some economists to adjust their housing market outlook for 2022. Realtor.com is now expecting U.S. home sales will decline 6.7% from last year. But what will that do with home prices? See, that's the issue. With inventory down, home prices will go up. Okay? If inventory comes up, home prices should go down. That would still make 2022 the second best year for home sales since 2007, behind 2021, according to Daniel Hale, Realtor.com's chief economist. I will tell you personally, my best year was in 2020. 2021, 2022 got tough because thousands of agents flooded our market. Thousands of new agents. Okay. And then thousands of agents will leave our market when the housing market turns. But right now, I would say I have not had a good 2 years because I typically work with buyers. I like to work at listings, but like I said, I have a lot of buyers that would sell their homes if they could find a home that they would like now. And I've told them, don't try to sell your home before buying one. An unscrupulous agent would tell them, go ahead and sell your house now, and then don't worry about it. We'll find something in the interim. That's going to squeeze you. I don't like those kinds of agents. If you're one of those agents, fine. It's just not who I am. Yet, even with higher mortgage rates straining affordability, homes that sold did not stay on the market for long. On average, homes sold in just 16 days of hitting the market last month, the fastest sales pace tracked by the National Association of Realtors. It was 17 days in April. Yeah, it's just like I said. You put a house on the market right now at the asking price and it's decent, somebody will bid it up, most likely. Even now, right this moment. With inflation at a 4-decade high, rising mortgage rates, elevated home prices, and tight supply of homes for sale, home ownership has become less attainable, especially for first-time homebuyers. This is what I'm seeing. My first-time homebuyers can't afford the starter homes because those people that are buying starter homes are established families at this point. With first-time homebuyers accounting for 27% of transactions, down from 28% the previous month and 31% in May of last year. Real estate investors and other buyers able to buy a home with just cash, sidestepping the need to rely on financing, accounted for 25% of all sales last month, down from 26% in April. And I want you to understand right here, the real estate investors and other buyers able to buy a home with just cash, that's where you need to worry. If Wall Street decides to change their mind and say housing isn't where we want to be sticking our money, you're going to have a massive, massive problem. So what did we talk about today? Well, we talked about a few things. One, what I've seen in the market, what I've seen about my buyers just this weekend. We talked about the picture that, hey, things are tough, have been tough for a while, and now we're seeing somebody do well. We're seeing somebody increase, do a good thing. Perseverance. Don't give up. Then we talked about the housing market crash. Will there be one? Will there be a housing market crash in 2022? Who knows? How do you define a crash? The houses aren't going down to zero. Okay. So then it's just a question of percents. And then we talked about home prices in general. Where are home prices going? Where are home prices going in 2022? These are the things we talked about tonight. Did we learn anything? I feel like what you're seeing from the news media, the real estate news media, is they're seeing, like, this is what they're seeing now. Okay. If inflation becomes more of a problem, if people lose their jobs because of inflation and employment starts to slip, they're going to have a different opinion on the housing market. They're only doing this based on what they see and what they're projecting. And they're projecting, my opinion, they're projecting based on single factors and not like the main factor, which is inflation. If we can't control inflation, the economy is going to sink. If you want to call that a recession, what do you want to call it? A correction? We're playing with words. It's wordplay. And I'm just, if you're a home buyer, you're scared that your house is going to go to zero. I'm telling you, your house is not going to go to zero. 100% it's not going to zero. And that's that. So again, if you enjoyed my live stream, come on, be a subscriber, follow me, post something in the comments. Maybe I'm wrong. Maybe what I read is incorrect. Maybe what I think is incorrect. Let me know. Maybe I'm right. Maybe you think I'm right. Only time's going to tell. Time will show us exactly if we're right or wrong. So hindsight's always 20/20. With that, I'm going to head out. Thank you for watching. I don't know if I'll be on tomorrow. I'll definitely be on Monday. I will see you then.